Hey everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Been trying to think of a way of putting this video together for a while now, and it's about risk management and position sizing, which are two of the things which, in my experience, are the things which you need to learn. First of all, personally speaking, I learnt them at the back end of my trading experience, and had I learnt these things in the early days, then it would have made a big difference to my profitability. But I'm just going to jump straight in. I'm going to try and make it as interesting as I can for you. I appreciate it's not the sexiest of subjects, so please, bear with me while we look through this. Okay. So when it comes to risk management, I get asked the question a lot about where you put the stop loss, and to a point where I almost feel like people may be, assuming that I'm trying to avoid the question. But the thing is, when it comes to stop loss, risk management, and position sizing, one person's portfolio and the way that they manage it will be completely different to another. And when it comes to your risk profile and the position sizing, that will be unique to your own particular trading strategy and your own particular trading plan. So when I'm asked those questions and I feel like I'm avoiding them, it's not because it's not I'm not something I'm doing on purpose. It's just that it depends so vastly on the individual and what their expectations are. Somebody that's trading a 15-minute time frame as a day trader is going to have a different perspective to somebody that's a long-term investor that's perhaps trading on a daily or a weekly time frame, and the risk management and profile is going to be completely different. So anyway, I'm going to jump straight into this, and these things here are the things which we need to be thinking about. The first one is risk, and the second one is position size. Now, those two things are the first things which you need to establish before you actually enter any position, in my opinion. So when it comes to risk and position sizing, there's a really great tool on TradingView. If we look at the side there, if we click, you can see long position or short positions, and these are measuring tools for those of you that don't know, so that you can work out your risk portfolio, your risk profile, and your position sizing, with a visual representation. And also, you can, with the same tool, you can work out your entry, your take profit, or your target price, and your stop loss as well, all on the same tool. So let me just show you. We're going to start with a long position. So for those of you that don't know, long position is you're suggesting that the price is going to rise in time, and I'm just going to show you that tool. So I'm just going to put it on the screen for now. And as you can see, when it first comes out, it's set to a ratio of 1 to 1, basically. So this measure from the entry to the take profit is the exact same as the measure from the entry to the stop loss. Okay, so I'm just going to leave that on the screen for a minute, and we'll come back to that because there's lots that we can do with that. So, as with most things, as with most indicators, risk management is something which you cannot use, in isolation to anything else. If you're just going to try and trade using a risk management profile without having any understanding of the basics of trading with support and resistance, and other indicators, then this is going to be not something that's going to work for you. As with anything trading, you use a multiple of indicators to give you an edge, and then you take a position based on a sensible risk and position size, which is in relation to your trading plan and in relation to the portfolio. So each trade that you enter into, the way that lots of people as well ask me about emotions and how you manage your emotions with trading. For me personally, over the years, it's got to the point now where when I enter a trade, then in my mind, I'm actually spending that money. So I'm actually, assuming that when I enter a trade, that I've lost the amount of capital that I'm happy to risk in that position. And then if we get winning trades, then that's a nice bonus. But I can honestly say that that is the way I look at it. When I place a trade, I take it that I've spent that amount of money. The trade is already a failed trade. It's already hit the stop loss, and I've already lost that amount of money in that position that I've entered into the market. And that's the way that I manage my emotions when I'm trading. Okay, so let's just have a little deep dive into this. This indicator obviously is very good. Sorry, this tool rather is very good. But as I say, please remember that you can't just use one method in trying to be a successful trader. You have to use a variety of methods. So, for example, what I'm going to do is I'm just going to draw a couple of support lines. So this is the current Bitcoin chart, as you can see, Bitcoin USDT at the top there. This is on Binance. I've put for demonstration purposes only because I just want to demonstrate how this measuring tool works. This isn't necessarily a trade that you may wish to take, and it's not one that I'm saying that you should take. I'm just trying to demonstrate how the measuring tool works and how you put together, how you manage your risk and your position size whilst you're doing that. So I'm just going to draw a couple of support and resistance lines. I'm going to keep this, straightforward, quite basic, in fact. So we can just carry on with the main topic here. So when we look at the, we all know that there's a good resistance at 44,500. Oh, sorry, I'm on a 12 hour. Let me just change to daily time frame. It's clearer on the daily. Sorry about that, guys. I wonder why I couldn't work that out then. So let me just pop that pop a couple of support and resistance lines on the daily chart, so you can see a couple of areas of interest. Okay, so I mean, there's lots more that I could draw on here, guys, as I'm sure you can see for yourselves. But I'm just going to try and keep this relatively simple in the video, short and enjoyable if I can. So, um, okay, so what we're looking at now is we're going to use the positions, the measuring tool, to basically we're gonna firstly we're going to be looking for a risk to reward ratio, which is this dotted line here. I think actually, first of all, before we go into the risk reward side of things, let's just have a look at the tool itself. And you can see here what this is saying in the center. There's lots of information in these boxes here. So this is obviously your entry level. So this is where you're going to be opening the trade position. And this is a long trade. So we're going to be presuming that the price is going to continue higher from where we are now. So we're going to enter a long position. So it says there at the moment, open P&L, which is profit and loss, which is obviously continually changing because the price is changing. But what we're going to do firstly is I'm going to set this up so that we've got a 2-to-1 risk reward. So you can see as I slide this bar up and down that the risk reward actually changes on the screen. Now, let me just highlight that for you. So you can see here. So at the bottom it says risk reward. Okay, and you can see that as I slide this up and down, you can see that the risk reward changes. So what I'm looking for at the moment is I'm looking for a 2-to-1 risk reward. So as you can see there, we can get it to, so we're at 2.02, so that's close enough. Okay, so we're at 2.02 there. So what we're looking at now, ignoring the price action for a moment, and just with this measuring tool, is it saying that we're going to be opening the position with a risk reward of 2-to-1. Okay, if we look at the quantity there, it's telling us how much of a position size we need. Now that's basically calculated. If we just double click on this, it brings up the settings. Okay, now we're going to say that our account size for the purposes of this exercise is going to be $5,000. Okay, and we're going to say that our risk profile is 2%. Okay, so we've got an account size of $5,000. That's how much I've got in my trading account for this example. The lot size is 1, which means basically 1 Bitcoin. This price represents one of whatever it is that we're looking at here, i.e. whether it's stock or or a cryptocurrency. So the lot size is 1 basically, which is fine. The risk is 2%, which we're happy with. And then you can see that the entry, the profit, the take profit, and the stop loss. You can actually just type these in manually, which we'll come to again a bit later. But we go to the style. You can change the style so that you can make it look, you can change the colors basically to whatever suits you. And you can see on there you've got compact stats, which takes away some of the useful information. So I always leave that off. And then you've got visibility. And then you've got visibility, which at the end, which is just basically some of the intricacies of the settings of this and how it works and how it measures. So we don't really have to touch visibility. Style is just to make it aesthetically pleasing to your eye. And the inputs, this is the important bit. So we're going to say we've got $5,000 to trade, and we're happy to risk 2%. Okay, so if we click OK, So what this tool has done now is it's saying that if we were to enter a position where we are now, the risk to reward for this move from the entry to the take profit is 2-to-1, meaning that the measurement from the entry here to the take profit is twice as twice the amount from the entry to the stop loss, and you can see that in this bar here. So it's saying that the stop loss. So the first number on there is saying the stop loss is $1,895 below our entry. So this will be our entry, $1,895 below our entry, which is 5% of the total value. Okay, so 5.15% of the value. So basically what that's saying is that $1,895 is 5.15% of the current price. So at the moment we're looking at, where this measuring tool is positioned, it's measuring over there at so what's that? That's 36,829. So the measure from the entry down here is $1,895 below this 36,829 price here. Okay, what you'll also notice, okay, is that if we go back into our settings here, we're saying that the account size is $5,000 and we're risking 2%. Okay, now 2% of $5,000 is $100. Okay, and you can see that here. So what this is saying is that the amount that your account size currently is $5,000, and you can see what it's saying is that if we enter this trade here, the price comes down and stops us out. Our remaining balance will be $4,900, which is exactly what we want to see, because we only want to risk 2% of our portfolio, and 2% of $5,000 is $100. Okay, you can also see that because we're looking at a 2-to-1 risk reward, we're risking $100, which is 2% of our entire account balance. Okay, and if we actually achieve from our entry our profit objective, which is this is $3,834 away, so positively from our entry, $3,834, which is obviously twice this amount. As you can see, it's a 2-to-1 risk reward. And you can see that this is a 5.15% loss, and this would be a 10.41% gain, i.e. twice the value. So 5% loss against a 10% gain. And you can also see in there that it's saying that if we, as we said below here, if we hit our stop loss, we would lose $100, and new account balance would be from $5,000 to $4,900. And we can also see here that our new account balance, if our trade is successful and we hit our take profit objective, and new balance will be $5,200. Okay, so once again, we're starting at $5,000. We're risking $100 to gain $200. Now, this is the bit where it gets interesting, because what we're looking at now is, for us to open this trade, we need to be thinking about what our position size is, and that's what this tool does for you. So you can see there that it's saying quantity is 0.053. Okay, so what that's saying is, if you were to open a position, you would need to open a position in Bitcoin of 0.053 Bitcoin for this calculation to come into fruition. Okay, so once we've worked out that we know that we're happy with our $100 loss, our $200 gain, and a 2-to-1 risk reward, this tool is set up how we want it to be, with the position size and the risk in being considered. So what we're going to do is just going to move this across now to see whether we can take a trade from there. And as you can see from where we are now, you've got some support lines here. You've got one support here, and obviously a second support line there. And you can see that the bottom of the stop loss here is actually below the lower support line. So we've got a couple of chances of the price being caught if it does come down this far before it hits our stop loss. So if we were to enter the trade now, where we are now, then we could say that this it is quite a safe trade. in terms of there being some support levels which will catch the price if the price comes down this far. Potentially, obviously nothing's guaranteed. What we could do is we could wait for a lower entry. We could wait for the price, if we think it's going to come back down, is we could bring the price, the entry down lower. And you can obviously then see that the stop losses move further away from the support. Everything else is still the same. You see it's $100 loss here against a $200 gain, and the position size is still 0.053. Your risk reward is still 2. Okay, so what we can see here is for this trade to be successful, we need the price to make it all the way up to this region here. So if you look on the right hand side here, you'll see that the grey box here, this grey box, is the entry from our measuring tool. So you've got the green box there with the timer below it. That's the actual current price. The grey box here is our entry point where we're entering this trade position. The red one at the bottom here, if we look to this side, the red one is showing us where our stop loss would be. That's the price for our stop loss there, 37,822. And we're also, if we look at the green one at the top there, go across to the green, you can see that the green one is showing us that the take profit is 43,551. Okay, you can also see there's a purple one above there. That's in relation to the purple dotted line here. Okay, and we can also see that our take profit objective is below the purple line, so it's below resistance. So in terms of, is this a potential trade? It's something to consider. Certainly, it fits our criteria. We're only going to risk, if we open a 0.053 Bitcoin position with a stop loss here, we're only going to risk $100. And if it does hit our price objective, which is below resistance, then we're going to make $200. So risking $100 with the potential of making $200. Okay, so just if we double click on here, if we just go to the, sorry, it's not what I want to see. We'll go back to this measuring tool again, and you'll see these numbers change. So for example, if you see the quantity here is 0.053, if I decide that I want to put a higher risk on there, so I say that my risk profile is 5%, then you'll see that this is actually shot up to 0.132. Okay, so the position size would need to be 0.132 for us to have the risk reward. So basically now we're risking 5%, so $5,000. 5% of $5,000 is $250. So now we can see that if our trade fails, we'll lose $250, so $500 if we lose this trade position with a position size of 0.132 Bitcoin. If we hit our stop loss, we're going to lose $250, and if we hit our take profit, we'll actually we'll make we'll be on $5,500. Okay, so $250 risk to $500 reward. That's where the 2-to-1 risk reward comes in from. But you'll notice that because I've changed the risks, that the actual position size has changed there. Okay. So this is where it gets more interesting, and without confusing you too much, if we put the risk up to 15%, what this is saying now is for us to what we're risking is 15% of our account size, which is $5,000. I don't recommend you do this, obviously, but 15% is a very high risk. 15% of $5,000 is actually $750. So you'll see that this trade position, the quantity has changed. The risk reward is the same, but you'll see that for our 5,000 account size, if we hit our stop loss, our new account balance would be $4,250, which is $750 or 15% of your 5,000. Okay, if we hit our take profit, you'll see that the new balance for your account will be $6,517. Okay, which is $1,500, which is where you've got the 750 times 2 is 1,500. That's where you get the 2-to-1 risk reward. But you'll also notice this is where it gets interesting, because this tool, people think that this tool does the work for them. Well, it does to a certain degree. But what you'll notice here is that the quantity, my position has got to be 0.396 Bitcoin for us to be able to take this position. Now this is where it gets interesting, because if the current price of Bitcoin is, let's say 40,000 for round numbers. It's just below that, but let's say 40,000 for round numbers. Okay, if I want to take a position size of 0.396, 0.396, well, that means that for me to open a position at the current price of 0.396, I've got to the value of my position has got to be $15,840. Well, I've already told the system that my account balance is $5,000. So this trade doesn't work, and it's not something that you would want to take, unless this is where leverage comes in and where you'd consider leverage. Okay, because what you can do is you can obviously work out what your leverage needs to be for you to be able to afford to have 0.396 position size. So let's say, for example, we used a 4x leverage. Okay, so if we divide that by 4, we've got a 4x leverage. The position size now, the cost of opening that position is $3,960, which is below my account size. So I could use a 4x, a 4x leverage to open the position size of that size. So 0.396 would be the position size. It would cost me 3,960 of my 5,000 to have that position open, which is obviously something which I can now afford. There's a 4x leverage, and the interesting thing is that if we hit our stop loss or our take profit, these figures remain the same. All that we've done by using leverage is we've allowed us to enter the size of the position, the quantity of the position has enabled us by using leverage to actually be able to open the position at that size of quantity. The actual take profit and your risk remains the same. So you're $750 if you hit the stop loss, compared to your $1,500 profit if you hit the take profit first. And I think that's where a lot of people go wrong, is actually realizing that when you're working out your stop loss, the first things that you need to do is to work out your risk and your position size. And then you work backwards from that using a measuring tool like this to work out where your stop loss is going to be for you to consider entering a trade position. So I hope that's shed some light and helped some people understand a little bit more clearly what this is and how to use it. And perhaps you can watch the video a couple of times. If you've got any questions and you'd like me to clarify anything, please do leave some comments in the section below. And obviously, I'll reply to those. And if there's perhaps I'll do a follow-up video if I get enough questions and there's enough things which I've missed out and not spoken about, then perhaps I could do a follow-up video to this. But guys, please, 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 risk management, position sizing is one of the first things that you should learn as a trader. And second to that is back testing your strategy before you put any money into the market at all. All the best, guys. Hope you found this interesting. Take care now. Always remember, guys, take profits and buy something real. Take care. See you tomorrow.